access this on YouTube as well. So, right. So you can, you guys can see the screen, right?
Yes, yes.
All right. Thank you for your response. So look at this Bitcoin. So what did I give out on the last webinar? So this is the supply zone we were looking at. So I'll just replay this chart right here from somewhere. So what I was expecting here was we have a break of structure right now, and very soon I will be posting a video on a break of structure where you can involve yourself for a trade. And unfortunately I won't be sharing most of the entry criteria. You can confirm through double MBs, triple MBs, CS, all of those I won't be sharing because I'm also learning from somebody else, and I don't have the option because it's not fair to them if I share. I could even be shoot from the site, so that's out of my hand. Otherwise, I could share, but in the same time, whatever I'm sharing here, it's enough for you guys to have your own edge in the market. So Wyckoff, I have shared so far, and I will be sharing a deeper explanation and a confirmation on a Wyckoff on our YouTube channel. But for now, let's look at this Bitcoin. So far, what do we have on Bitcoin? We have a bearish structure, printing break of structure, break of structure, break of structure, and then finally we have this break where we haven't had our break of structure. So what did I say was once we have a break of structure right here we can have a sell bias when price hit here and then comes up maybe somewhere from or this supply zone or somewhere here. But if you remember on our last webinar, I also said that we have a trend line right here. That is, we are liquidated all of the sellers here in terms of we are taking out their stop loss here, their stop loss here, but this is not enough for us at this. I mean, price could easily go up somewhere here to grab all of the stop losses here, at the same time activating the buy stops here. I'm gonna go ahead and assume that you understand what is buy stops. That is when price breaks out of certain areas, as in a trend break here. That means once it breaks here, there will be people who will be placing their buy stops, their automatic buys here in terms of their orders. So when they place their buy stops here, their stop loss may be somewhere here, we don't know. But there will be sellers here. So we take out those sellers here, we take their stop losses, and then we move down and reach this area or zone for buying zone here, and then moves up and then potentially go down. Still, on this market, I'm still expecting a pull down, but my area is maybe from here or maybe here. I have two zones right here. But now our point is the zones, is the price going to move down from here or from here? And if we expect from here, if price moves up like this, it's not that we were wrong on our analysis. It's just that we were right because we kind of look for a confirmation of sales, and if we don't get it here, fine, let it move. If it breaks this zone, then we will be looking for a buy up to this zone, and then we'll be looking for a sale from here, maybe till here. That's our first partial, and then potentially here, and then maybe here. So that's not the point right now. The point is there is a liquidity here right now. But if you see in terms of supports and resistance, what do you see? This is a fine resistance that we have right here. So maybe people are looking for a break of structure above this resistance. So maybe people are putting stop losses here, here, and selling this. So I give out not a signal. I do not provide signal. I give out my bias that price may be reversing from here because of this break of structure. Be- Before this price action was made, when price was here, I was expecting a pullback at least still here before moving down and then potentially coming down. But what happened was, let's see what happened. I think price broke this structure, and then I mentioned on my previous webinar that you should not be surprised if price do move that move here. We should not be surprised because, as I've explained in my previous webinar, what do you have here? From this week to this week, and from this week to this week, what do we have? We have imbalance. Institution has to bought here up here millions and billions of dollar in order to in order to sell this price. So when they sold this, what do we have? We have their positions negative because they bought here. They need to close these positions, maybe coming here or here. So that is the expectation we're having right here as predicted on our price here. So we need to have that expectation that they need to close their positions in order so that they are not on negative. And institutions and banks, they are never on negative. So that was the expectation. I said I'm expecting for a sale if it gives a breakdown of this, and then somewhere from here we can sell till here. But do not be surprised if price gives a breakout of this and then go all the way up here. So that's exactly what we had. Let's just forward this and let's see what happened. Yeah, exactly. So what do we have here? We had a breakdown of this, and some of us may be looking for a sale from this supply zone. Why this supply zone? Because where is this break of structure coming from? From this zone. And if we refine our zone, this order block has been already mitigated here with this structure. If you do not understand the word mitigation and what I'm explaining, please refer to my previous explanation, to our previous webinar. I have already explained mitigation. Mitigation is nothing but when price comes back to test the order that gives a break of structure or certain structures, price most of the time, not always compulsory, but most of the times it comes back to test those areas and then gives us that price that we want. So when price moved this up, we were expecting a certain sale from this area, and then if necessary we were even looking to sell from this area. But what do we have? We have such a big bullish momentum right here that we didn't even have any chance. If you go to a lower time frame, even then you won't have any chance to involve in such a movement right here. See this movement. How are we supposed to involve in this? We don't have any options to involve in this. That is why we need to look for confirmation before placing our entry, whether that it be buy or sell. And those entries can be in the form of Wyckoff. That is, so far I will go in our webinar, but there can be in the form of a MentFX blocks. It can be in the form of a CS entry. It can be in the form of a triple M. Those are reserved for our private mentorship that I will be launching very soon. So stay tuned for that. But for now, we don't have any options to sell right here. And if you did not look for a confirmation right here, what do you have? You have hit your stop loss right here, and those people who are trading without any stop losses, they are in a huge negative position right now. So this is why, even though you may have a perfect setup, even though you may have a perfect zone and area lined up, your MAs, your maybe what do you call your resistance, your moving averages, your Fibonacci, everything 100% lined up, maybe still we do not involve like this. We should look for our confirmation, because without confirmation, what are we doing? We're simply gambling in that market. We are simply gambling in this market without confirmation. That is why it's very important that if we had a confirmation somewhere here, then maybe we could have looked for a sale. So what do we have right now? Right now. So why it is breaking up? We can never predict the market where it wants to go. We can only anticipate and form our bias where it might go. Our previous bias was that price will go here and then move up, but price already broke this zone. We had a hidden demand and supply zone somewhere here. This I have already explained why this is the hidden demand and supply zone. But if you don't understand, you can drop a comment and I'm happy to explain why this is a hidden demand zone. Even now, if you're not muted, you can speak and ask me why this is a hidden demand and supply zone. So even that we have already broke the structure. So why do we have this zone here? Now, seeing this structure, you can even ask, our order block should be the last up move candle, in which case, this case, it's from here to here, right? So the question is, why are we taking these structures? And on top of that, why are we not taking the full zone? Why are we taking from here? So these are the questions you can ask me if you observe carefully. But it's not necessary that the last up move before a down move is the order block. The last very candle can be an order block. This will come with your experience as you go along. And this is an order refinement. We can refine this even further by going into small time frames where we will look for orders that are not mitigated. This mitigation, don't worry about it if you don't understand now. If you attended my previous classes, you will understand. But if you don't worry, because I will be posting the video on our YouTube channel about mitigation. So right now, this is on our area where we are expecting to sell. So why are we expecting to sell? Because of the structure that institution has put in. This was a bullish structure and we have a break of structure right from here. Since then, we have been experiencing a down move structure, breaking structures, breaking structures, breaking structures until this area. And what do we have? We're still expecting this zone to tap in around 31 to 30,000. So that is why we're still looking for sale from this zone. So you understand why we didn't get a sale from here, because we are grabbing the liquidity of all the people selling here. So if you switch to smaller time frame, you will see that price somehow stopped here. Let me just check in a 15 minutes if that's what happened. Can you see right here? Price stopped here and then it gave some kind of a pullback right here because of this hidden demand in zone. So if you're interested, leave a comment on the section. I will be happily go through why this zone is a hidden demand and supply zone that I will explain. So right now, what is our expectation on Bitcoin? Our expectation is that price will move at least till here. So you don't need to involve anywhere in here. Sometimes waiting and having patience is the key to your trading, to your profitable trades. So let's just wait for this price to make up here, and then are we going to sell from here? No, we're going to look for our confirmation. It doesn't matter from this consolidation phase. If it gives a breakout, it does not matter. Whether it gives with such a bullish momentum, it does not matter to us, because we have already made our zone. We have our bias that price is going to reverse from here, maybe up to here, maybe up to here. We don't know. That's why we take partial profit. That's why we move our trades to BE, break even. So that's the point. That's what I wanted to make here. So this break of structure, this move up, we should not be surprised, because of we're grabbing the liquidity of this trend line, or even the break of this resistance, you can say. So what we can do right now on Bitcoin is, if price moves up here, then we can sell. But if price reverses from here, then you can look for buy from this zone, from this zone. So that's what you're going to look. That is what I'm expecting. But we cannot be right all the time, and that's fine. We can only have our expectations. So that is the expectation that price may go up here and then reverse, or price may reverse from here and give us the buy, and then reverse from here. So this is so far we are going to cover from our last session on Bitcoin. So right now let's go to, some of you asked me most of the major pairs that you want to go through, and then we'll look at gold, and then some of the Japanese pairs. So let's just look at, first maybe we'll go through it, Euro USD, and then you can comment or you can speak what pairs you want me to look at. Okay, so what do we have on Euro USD right now? So this is a 4-hour chart right now. Our expectation is that price will go here and then move down, but that did not happen, right? Price is reversing already from this area, but interesting thing is it broke the high of this structure with this move. So the point is, did it really break the structure, or was this just a liquidity grab? Because as I've explained in my previous webinar, above every swing highs there are liquidities that price want to go. So this may be the case where price just liquidated with this wick, and then it's ready to move down. We're never sure, but that is the expectation we're going to build right now. What is our expectation right now? Right now here, your only zone that you might be looking at is this area for potential retrace, but I'm still expectation, our expectation right now is that price will move all the way down here, and if it does, then we involve ourselves for a buy here. And how do we do that? With our confirmation with Wyckoff, with our double MBs, with our CS entry, and those are not available to you, but that's fine. But in terms of Wyckoff, if price may do something like this, this is how we involve. This is a Wyckoff, in the sense there is a transfer of orders from the weak to the strong hands. That is, these are the RD buyers, because we are reaching the zone here, we're reaching a support area here. So people started buying here, but still price managed to move down, making our spring, making our STB. This is very important. Every area you involved, you need to look for this confirmation, and I will show you every buy, every sale, you will have this structure. You will have Wyckoff. Nothing moves without Wyckoff. In our trade, I don't care what people have taught you, what you have learned so far, how we certain from forms the a certain candlestick patterns in the resistance area, maybe in the form of a inverted hammer, maybe in the form of a inverted head and shoulder, maybe a bullish engulfing pattern. We are not interested in those things anymore. We are smart money traders. That means we understand that smart money traders, that is, the institutions, do not look at candles and trade. They do not see this as a this candle, they do not see as an engulfing bearish pattern and hence they're selling. We do not. They made this move for retail traders so that okay, now I'm seeing a maybe that bearish engulfing pattern, so I will sell here. So that's what they want us to believe. In in the process they are making this trend line. All right, so I'll sell here, I will sell here, I will sell here, I will sell here, I will sell here. So when certain people are selling on this trend line and they succeeded and they got profited, but there are when they have enough orders selling this trend line and they just break it, hence taking out all the stop losses above this, above this, above this. So this is the liquidity, and what this move is doing, it is fulfilling all the imbalances left in this area. At the same time, it is coming to mitigate the order block right here. So this is the reason why this is coming up. This move right here, this huge move. We all know what made this move. This move was because of NFP. But I guarantee you, whether there was no NFP, whatever news, whatever outcome, this move was bound to happen. If you don't believe me right now, that's okay. Go back in your trades, go back in your chart, and then check this, and you will see what I'm talking about. This move, this was bound to happen. This move was bound to happen, whether there was news or not. So this is why I say it's okay if you are a very experienced traders and you know certain areas where you look to buy and sell on certain events and news. That's all right. That's your edge. But if you're a beginner and if you're not very sure, then why gamble here? Price could easily drop here. Price could easily break out of here. Why gamble yourself? Where is your stop loss on the news? You don't have. You're literally gambling. What if it just moves? What if for those people who sold here? So that's very unfortunate. They don't have any stop loss and price just keeps going up till this point. But looking for him from an smart money understanding concept, even if price was making this move, even you would have gambled, but you would have sold from this area because you know there is a supply zone, and then maybe you would have sold from here because you know this is a good supply zone because we are still in a bearish momentum, bearish downtrend, and we haven't touched these zones that we have below, and they will. So maybe price go up here and then you sold, or maybe you sold from here. If that's you, then congratulations. But without knowing why price is doing, just because there is a breakout of this trend line and you're buying here, I'm sorry my friend, you're not going to last in the market. At one point they're going to take away all your profit, including your capital. That's what happened to me. I do not speak this by looking at some charts, by looking at some YouTube videos. I speak this from experience. I've done this and I've failed. And I'm not saying that you're gonna fail. I'm very happy for those people who succeeded in making all of this profit. But if you want to understand what is going on in the market, If you want to see what's happening, why this is the move, why it is coming up. Now we understand because it's coming up to grab the liquidity of all this. It's coming up to fill the imbalances left and all of this. Let me just show you. If I just draw the if I just draw you the volume profile right now from this area to this area, what do you have? You have the max volume here, right here, and you have the lowest volume here and then here. That means price may reverse from this area, which it did a little bit, and then price just shoot up. And where is the next maximum area of volume? Right here. That is where the price is protecting right now. So price may move just like this or just like this, but our expectation is that price will reverse at least maybe up to these zones or these zones before giving a buy and then eventually sell off. I'm still bearish on EU, whatever, regardless of the outcome. I gave you this on a monthly chart. I gave you 3 months ago, if you remember. Maybe some of you were not here on our channel at the time, but most of you were. I gave you this move from here. When this candle was formed, I gave you a swing signal that price is going to come to this zone. 3 months ago I gave you. And why? Where is price now? From here it has moved down to this and then this and then it's moving up right now. But still, maybe price may go up from here, but it does not matter to us because let it go. We will find a way to involve in that because we are smart money traders. We can involve anywhere. That is the beauty of being smart money. You don't need to catch the last movement up to the to the highest point. No, you don't need to catch 500, 600 pips. That's fine. If you can involve yourself with a 1 pip stop loss and a target of 10 pips, that is 1 is to 10 risk reward ratio. That means if you risk $100, you are targeting $1,000. Think in that perspective. See in those perspective. Do not be fooled. Don't get fooled by people showing you earning thousands and hundred thousands of dollars. That's fine. They have gone through their hardships and now they're earning. Do not follow signals. I used to do. I used to follow very good signals. But where am I right now? I unfollowed every one of them and I'm teaching you right now why. Because I wanted to learn. I wanted to know why this move happened and why is this coming up. I do not want to buy the breakout of this consolidation. I do not want to buy the breakout of this trend line. I do not want to sell at the point of this trend line. No, these are all manipulation. These are all your thinking. This move was made by the institution in such a way that people will sell at these areas, at these areas, at these areas, at these areas. Why? Because when they have enough orders, they want to come up and take out all of these liquidities. So this is what I talked about liquidities in my YouTube channel. And if you haven't, just go through with that. That is just an introduction. I will be getting deeper on those areas because you need to understand, you need to learn, you need to know where manipulation is being done. If you know all of these things, you won't involved in selling these areas. Instead, you will be looking with the idea of the trend line that you have. If it lines up with the break of structure here, if it lines up with the order block, with the bearish order block here, then maybe you can consider selling that. But just buying and selling because we have a breakout of a trend line, of a channel, of a wedge. That's just plain stupid. I'm sorry if you find me offensive saying this, but you will thank me one day when you understand these terms, when you understand the real manipulation. So, Euro USD right now, the expectation is that since we have already have a sell bias right from here with the news, and then my expectation was that still price may come up here and it will eventually, if not at the moment, but at the very recent structure, our expectation is that price would at least come here and then here. And those are the areas where we will be looking for a head spy. If you sold from here and you're just waiting, that's okay. We will look for a buy from somewhere here or somewhere here. So that's for Euro USD. So let's go to ZBP USD. What do we have here? Let me just remove this. By the way, you can use this volume profile or the fixed range. This is a very important uh, tool that you can use. From here to here. You can use it by drawing from a certain high to low, and you can look where price is at, where there is the most liquidity, where price is lowest. Those are the areas price are expected to move, and those highest volume in those range, those are the areas where price tend to respect. So in this particular down move, this was the first area we were expecting price to move, in which it did, and where it is reversing from with this highest volume in this range. It's reversing from this range, and what it coincides with? It coincides with our sale area. Even before I made up mine to start this classes, this zone was already made up in my mind that this is the area that I'll be looking for. So of course, I'll be honest with you. I still expected price to move at least 50% of this zone somewhere here, but it did not happen, and it's fine. That is why when you involve, you always leave some portion of your buy or sale, because if those person wants to run, let it run, and if it comes back to BE, that's fine. You do not lose anything. Maybe you do not get profit for that particular portion, but that's fine. That's how we involve if you want to earn extra. Otherwise, you are never gonna go anywhere. If you just sold from here, and let's say you sold for $1 here, and you book your profit somewhere here, and then price kept moving, and let's say price kept moving here, what do you get? Nothing, just this area. If you book 50% of your area here, and then you waited and you left 50% of it to ran all of this, imagine how much you would earn. And what if price comes up? That's fine. We will look for a sale on a deeper retracement of area. We are smart money traders. We do not scared about FOMO. We are not bothered by missing out. We will involve everywhere and anywhere on any chart, on any pair, and at any given time. That's our mentality, and that's what I have been showing you in the past few days. I have sent you as many as 15 signals, as many as 15 charts on a single day, showing you that it is possible to involve that many on a single pair. I have sent you on Euro USD alone, that many pair. I mean, that many sales or buys. Why? Because I know even if I book some, if price comes up, okay, let me look for a sale, because my expectation is that price may still come up and mitigate 50% of this order block. And I won't be surprised if price just shoots up here. because that is my expectation, that is my bias. I won't be surprised if price moves down all the way here and then shoots up, because this is the zone that I'm looking for buy on GBP USD. So those are your bias, and this bias will come with your structures. On the previous webinar, I have touched a little bit about structures. I mean, just look at this. What do you have in this structures? What do you have? This. This structure is like this. View it as a higher time frame. This is the structure. That means there will be a candle like this move, and then there will be a candle like this on a higher time frame. How easy is that? There's a candle something like this move, and then this move is a candle lower than this. So you don't even need to shift to a higher time frame or lower time frame to see all of this. With the given structures that we have, you can already predict what is the candle printing. So if you can see these things, why do we need to study candlestick patterns? We don't. We don't need candlestick patterns, because the bank do not trade with candlestick. They do not sell here because there is an inverted hammer, or what is that? Bearish engulfing. They're not selling because of that. They're selling here because they have a protected high right here. And the expectation is that price will still move to these areas. And by this move alone, you should not be selling till here. Price may easily do this and then move down, or come to this, or it just moves down. Whichever is the case, that is fine, but we should not be involving just because you have a bias that price will be moving down just like that. All right, so this is the expectation of GU right now. My expectation is that, what do we have here? Let's just see. What do you have? We have a break of structure right here. We have a break of structure from this area to here. So institutionally, this has shifted bearish from this bullish momentum to bearish. So we can be looking for sales on the last order block like this. If price comes up here, then we will be looking for a confirmation. And what is the confirmation? Something like this. Something like this. That is Wyckoff distribution. We will be looking for that confirmation, and then we will be selling. And how do we look that? You cannot confirm that in a 4-hour chart. If you are monitoring your chart in a 4-hour chart, then you need to move it to lower time frame, maybe 5 minute, 10 minute, 15 minute, whichever that fits you. And which time frame exactly to use, that also I'll be putting on our YouTube channel. That will come as a different video. Stay tuned for that. But for now, this is the bias that we're gonna have, and price may easily come from this zone. Price does not necessarily need to move up here. It may come from here. So what is our most important thing? First, we need to find our zones where price might go and then reverse or buy. And then we need to look for confirmation. Where is the first target? This low is our first liquidity. So that is the target we will be having. So right now we have covered Euro USD, GBP USD. So let's look at, you guys want to look at USD JPY? Guys, please feel free to respond. It's okay. You can speak up or you can type if you're not comfortable. Otherwise, if you, I don't think many of us trade USD JPY. In that case, we will be moving on to gold or either USD CAD. So just give your response.
Hello.
Yes, brother.
Hi, I'm sorry. I was in another live session, na, so I just joined you.
Okay, brother.
So let's see what we have gold, what we see, because I haven't analyzed anything na, right now because I was busy. And then let's see. What do you see about
Okay, brother.
gold intraday?
Okay, so let's look at gold intraday. So what do we have right now on our 4-hour chart? So this is where our structure comes in. This is very important, guys. Let me just give you a detailed explanation of the structures. I won't be going into much deeper on structures. That will be for our private mentorship, but let me just give you a glimpse of how the structure works. So what do we have here? This is a bullish structure. We have this, and you could have potentially look for a buy from here, and then we got our mitigation of this zone and moves up here, and we break the structure here. Once we break here, we will be looking for a buy on the retrace. I will be putting out for a video on this particular that will be called a three box method, where we look for a buy or a sale on a very recent structure, break of structure, and we involve. So that video will be coming out very soon. Stay tuned for that. So again, we have a break of structure right here, and we look for a buy on the retrace, maybe somewhere here. So price is right now here, maybe it may come to here. So that is expectation. And that is sometime, that's why I sell in the areas that you may see as a support, or sometimes I buy in the areas you may see as a resistance. So what do we see in this structure? Let's say this is a 4-hour structure. Higher high, higher low, higher high, higher low, higher high, higher low. But if you see this in maybe in a 15 minutes time frame, maybe you see this. I know this may be a little bit complicated, but it will make sense. Just just think of it. This is a 4-hour structure. Okay, let's see if I can move this with a different color. Oops, black is not good. All right. So let's imagine that this structure right here, it is a 4-hour structure. And if you see this in a 15-minute structure, you may see that this is a bullish structure and this is a, it is turning bearish right here. But the question is, right now, you might not have come across to it, or maybe some of you already experienced this. I don't know, but you will definitely. You will ask me one day that why is my zone not holding? Why is the zone? Even there is a Wyckoff, even there is that MB confirmation, there is a CS entry, and all of that, all the frigging confirmation I got, and still why I'm not, why my buy from here got stop out, maybe price stop out here. You were looking for a sale maybe out of here, and then price just moves up. So maybe one day you may ask me, when you understand this completely, you may ask why price is not going down. And then I would say simple, look at the higher time frame structure, what it is building. Look at this. Even though you have a bearish structure, continuous bearish movement right here, but where it is stepping into? It's stepping into the buying zone on the protected low of the institution in a higher time frame. Why would you even sell here? If you sold here, that makes sense. If you sold here, that makes sense. It makes sense here, but if you sold here, does it make sense? No. It has, or maybe this action was coming something like this from before. Like this. It has been printing bullish breaking structures like this. Why would you sell here? If you sold here, I would be very happy. We would be very happy taking our price all the way down here. But why would you sell here just because you have a break of structure? No. So this is where structure comes in, and this is why I always say structure is the first thing you should master and when it comes to trading. If you understand structure completely, swing trading becomes a piece of cake. You can trade anywhere, any stocks, any pair at any given time. This is why I say swing trading is very easy when you understand structure. But without understanding the structure, you are literally gambling. Why? See, some people might be selling here on the break of this structure right here. But those who understand structure, they would be buying here. Same thing here, they would be buying here. Maybe we can sell here and then we buy here. So this is the understanding of structure that we should have. And you should also know that in between this, there will be price moving like this. So if I go on like this, it may become very complicated, but just my advice is that do a back test on this. Just open your chart on a daily time frame and then mark your legs, your swing highs and swing lows with certain colors, and then move down to 1 hour and see those structures with a different color. Move down to 5 minutes and see those structures. You will see what I'm talking about right here. So it's okay if you don't understand right now. Just know that structure can be a little bit of complicated, but structure is the first thing we should understand in a market. Once you understand structure, you can form your bias, you can form your zones where you'll be looking for buy or sale. And this is why some of you used to text me personally and they say, I have marked the perfect OB and it did not hold. And then you will text me that, okay, can I buy this zone? And then I will look at the structure and I would say, be very careful, it has not come to our zone yet. So that is the reason that I say those things, because of that structure. We need to have our ideas of our higher time frame. You don't even need to look at the higher time frame. What do you see here right now? This is the structure. If you really want to go crazy, you can see your structure already. And what are this? These are just candles forming like this, like this, like this. Some like this, the break of structure maybe, and then some like this. So this same thing applies in every time frame, in every analysis, whether you were doing this on a 5 minute chart or you were doing this on a 1 hour chart or a monthly chart, everything applies the same. And see, on gold, this is the higher high, higher low, lower high, lower low, lower high, lower low, lower low, lower high, lower low, lower high, lower low. So that is the bias. This is for swing, but just for your understanding, this is how institutionally we have the highs and the lows. All right. So beside all that, let's just look at gold right here. This is a 4-hour chart on gold. So what are we expecting here? On gold right here, this move right here, did we break the structure here? No, we're still bullish. And if you remember, this was the NFP news. If you see in a 15-minute chart, this was a NFP news, and I gave you this zone to look for a buy. Why did I look for this buy? From this zone, do you see any bullish order block? No. This is where refinement comes in. This is where you need to refine your zones to look for a buy or a sale. And that this zone came from 3 minutes. I still, okay, not 3 minutes maybe. Let's just check. Okay, it came from 3 minutes. See, it came from this order block. If you see, price reversed from right here. So this is how you can refine your zones. You can refine your areas when you're looking for buy and sell. And once you have this zone, are you going to buy here? No. We're going to look for confirmation. Are we going to get that confirmation in 3 minutes? Do we have a wipe off? No. So that's where we move to lower time frame. And then we look for that confirmation. Let me just give you a rough idea right here. This is a very ugly wyckoff, but selling climax, automatic rally, ST, and an STB somewhere or STB here. The spring, the move of this spring make this break of structure, and that's when we know that price is turning bullish. So maybe on the retrace to this block, that's where we can involve ourselves for a buy. So that is the anticipation. So this involvement, this I won't go into much detail because this is again this will be reserved for our private mentorship. So these are the areas where you can involve yourself for CS entry, double MBs, triple M, all of that will come from private mentorship. But see, my buy here, it met here. And what was this? This is a 26 RR trade. So this is how you can involve yourself for a trade from a lower time frame. We do not need to put stop losses below here or somewhere here. No. Why? Because if this move breaks the stop loss here, it means that this is no more the protected low that the institutions or the banks wants to protect. That means they wants to go lower. So that is why we have a stop loss. We have a break of structure here, and this low is protected with this move. It moves higher here. So this is how we look for structures. So at the moment on gold, what we have here is this is the move we have on gold right now. Do not be surprised if gold moves all the way down to this zone. This is what I'm expecting actually, because this move break the structure here. But why is this coming up here? Because we had a bullish order block right here. They had enough orders to pull this, even on NFP news. So if this price comes up all the way down here or up here, we should not be surprised because there are imbalances left. So this is why sometimes it's better to wait for price to play out before you involved. So this is where patience comes in. It's okay if you miss all these trades. If you know that you can involve somewhere and get 30 RR or 10 RR, why do you need to involve here? Why do you need to FOMO yourself and in buy both here and put your stop loss here? and got a 1 and 1 is 2 RR. Why? That's not worth it. So sometimes waiting will give you that perfect setup. So goal as of for me right now, I will be on sideline because this move either breaks here or below this. That will give me a confirmation where I want to go on this gold. It's okay if you do not find that setup on gold. It's fine. There are hundreds of pairs. You can look at others. If you find a better things that you can look at, you can make the same money. Why involved in gold? No. Some people are so obsessed with gold that okay, I will trade only gold because it's so volatile, it gives me profit. That's bullshit. If you do not have a trade here, why would you involve? If you're gonna wait this long on this, why would you involve? For me, if you want to go crazy, I'll go this into 1 minute and 5 seconds and 15 seconds, and I'll find you a trade. But if I can find it in somewhere on other pair without involving, without giving so much of attention, what's the point of giving that much of time here? So that is why gold, either I wait for this move or the breakdown of this, and then I look for a sale or the come off of this on this zone or the break of this, and I'll if it breaks this here, I'll look for a buy on the retrace of this on gold. So we've covered your USD, GBUSD. This also we've covered. So let's look at USD CAD. Then we'll move to JPY pairs. All right, so this is USD CAD, and let's see what's happening here. Let's move from our daily chart because this is a pair that I never analyzed, so I'm not aware what's happening. So we're gonna have to do a little deeper on this. What do we have? We have a break of structure right here. That means we can expect price to come somewhere here and then we sell and then move lower. Well, we're not going to involve on that because this is going to take months, weeks. It does not concern us. So let's move to lower time frame. What do we have on a lower time frame? Let's look at the recent. See, some of you might already see a what is this? Inverted head and shoulder. Maybe, I don't know. And I'm not saying that it is wrong. It's okay. If this gives you an edge, if this gives you a profit, that's well and good. Go ahead. I'm happy for you. But if you really want to understand what's happening, then you should look further. Why is this move happening? Where is this move coming from? From this zone. And in this zone, what would you look for? Wyckoff. On the break of this, we can buy. On the retrace, we can buy. And right now, let's look at the very recent scenario. Forget all of those. It does not concern anymore. So this is the video I'll be putting out where you involve yourself on a very recent structure. What do we have here? We have a break of structure right here, this move. So that means on this very recent move, we're bullish. What are we going to do? We're going to make the last demand zone. This is the demand zone. Why is this is the demand zone? The last candle before the up move. Some may take this as the demand zone. That is fine, but we should also include this wick that come below this. This is why I'm taking this hold. And if you're super crazy, you can go into all the way 5 minutes, 1 minute, and you can refine this order block. But if you don't want to do all of that, what you can do is simply take your Fibonacci, take 50% of this. This is the area where you will be looking for buy. So with this move, what are we having? We have a break of structure, and then we have a break of structure here, and still we are yet to break of structure. So this is a liquidity. So this becomes our target right now. If price comes back all the way here, this is the area we will be looking to involve. Where our target is this. You can take profit on certain highs and here and all, but this will be our ultimate target, first target for this. And if you want to go swing, you can maybe target this, and then you can target somewhere here, because these are good supply zones. Before price reverse, you can take out your profit, and you can look to hedge your positions. You can look for sale on these areas. And so I'm still expecting that price may grab this liquidity first, something like this, and then we'll go somewhat like this. This is my bias on USD CAD right now. All right, so let's look at some of our JPY pairs. Okay, maybe CAD JPY. Look at this. Cool. We haven't. Okay, I have not looked at JPY for quite a very long time right now. And what do we have here? These are the areas I drawn before. What happened? Price broke this, came down to test this area, moves up, broke this, came down to test this area, moves up, came down to test this area, moves up, failed to test this area, and then moves down. Hence, shifting bearish from this area. So this is where structure comes in. And this move that I was talking about, when I put out the video, you're gonna love it. You're gonna that would be called a 3-box method, where this would be your first box, this will be your second box, and the third box will be your entry confirmation. Unfortunately, other than Wyckoff, I won't be sharing on the group about the entry confirmation. That is reserved for the private mentorship, but we still can involve ourselves with Wyckoff, that I'll be sharing. So you would have a beautiful buy from here, a beautiful buy from here, a beautiful buy from here. But then what do we have here? We have a break of structure right from here. So our expectation was that the same here, break of structure, comes up on the retrace we bought here. Same on the break of structure, we sell on the supply zone here, and that is what happening here. So right now price is in a consolidation range. We do not need to look at this trend line. No, this will be just a manipulation for you. Forget of about trend lines and channels and all that. People trade, that's fine, and if you're good with that, it's okay, go ahead. But for our own understanding, what do we have? Maybe let's go to, okay, this is 4 hour. What do we have on this recent structure? We have a break of this, we had a break of this, and what did we do on the retrace we bought? So we had a break of structure here, we had a break of structure here. What can we expect? We can expect a buy from this zone. Why am I taking this zone? Remember, a wick in itself is an order block. So we can buy from here, and this buy, if you took buy here, it's been already activated. And where are you going to target? The target is this high. And where can your ultimate target be? Here and above here, because we can expect at least a 50% of this zone, knowing that this high could be in liquidity. So it can come up all the way to here and then moves down, because institutionally this has already turned bearish, breaking all these lows with this move. So It does not matter where this move comes up, we will be looking for a sale where this zone, this is the area, this is the target. We will be looking for sale on this particular CAD JPY. If this comes up, we'll be looking for sale. Even if this moves down, if this price makes this like this, say price makes like this, where are we going to look for sale? Here on the last supply zone. When it comes here, we'll be looking for a sale and then buy. We will buy here again because this is a good demand zone. If this moves breaks all of this, then this is the last supply zone that we will have. So this is the bias. Before anyone give you any signals, before you follow any signal, before you mm, involve yourself anywhere in the market, you need to have a bias. Let's say that you're looking at this pair tomorrow, Monday. Before you go into the market, you need to have a bias where this market is going. If this is going, I'll sell from here. If it is going breaking down here, then I'll have a sale here. That bias has already be there in your head before you make a buy or sell in that particular market and that particular pair. That is why I always say do not follow signals. It is okay to follow signals. There are lots of people who provide good signals. In fact, our TP owner Rishi provides signals. It's good. You can follow. You can earn money. That is good for you. But if you want to learn in the long run, I do not recommend for myself that following signals because you will be dependent on others for your profit. What if I die tomorrow? What if he dies tomorrow? Who are you going to depend? You're going to jump to another people. That is why you need to have your own edge in the market. I'm speaking this because I used to do that. Lots of people are still texting me saying, do you provide signals? Please provide signals. No, I do not provide and I'm not going to provide. I will continue to share my setups. I'll continue to teach you and share you all my knowledge, but I'm not going to provide signals because you're not going to go anywhere. You're not going to learn anything. And still, if you want to do that, that's okay. Go ahead for those signals. I recommend Rishi's signals. He is very good. You can follow his signals. You can earn very good. If that's what you're looking for, go ahead. But this is not your place. This is not your place to look for signals. This is a place where you can look to earn, where you can learn first and then earn. This is an area where you can earn. You can text me personally, you can ask me questions, or you can drop in the question in the group, in TP group, and this group, anywhere. But we will be there to respond you if you want to learn. But if you're looking to make profit, go ahead, do it. That's your own problem. We won't be responsible for that. So far on this JPY, the very immediate structure that you can look for is, I won't even considering if this move makes a break of this structure, something like this, then go for sale here. Look for a sale on this zone right here. If they do not break this, look for a buy here and target this liquidity and here, and then yep, till here, at least till to this 50%. So that's what you're going to target in CAD JPY. So guys, I think it's been quite some time. Is there any other pairs you want me to look at? Guys, it's okay if you don't want to speak. You can respond. You can text on the group. I mean on this Telegram. Otherwise, you can speak. Feel free to speak, and then we will discuss some more. Okay, let me just look at GJ. Somebody said GJ in the group.
So, I want to ask you something. This recording, can you upload on YouTube?
Yes, brother, I'll be recording this and upload it on the YouTube. Maybe if it is too long, I will be cutting some portion of it. Otherwise, yeah, I'll be uploading this.
Okay, just thanks.
All right, bro. So let's look at it JPY. So this was okay. This is the 4-hour chart JPY, and what were we expecting? We had a break of structure here, and then it came down, and it did not come down to these areas or even here. So we can still expect GBP JPY to move down. In fact, CAD JPY has already moving down. I do not recommend you to compare with different pairs like JPY pair CAD has done this, so I'm expecting to do on GBP JPY this. I do not recommend that because every pair, if you really think about it, it's about two different countries with the different economies. So you comparing that with an Australian JPY with an GBP JPY, I don't think that that makes any sense because Australia has a different uh, currency, a different rate of interest, a different forms that will be coming in, and at the same time, Great Britain may have a different perspective. So even though they belong to the same JPY pairs, but they will have a different pair. Just talk about India, for example. Let's say USD and rupee. So maybe it's 75 right now, and it may go on for years. That is why in forex you see lots of volatile up and down, because price did not just go up. Because we as a country in India, we're trying our best to improve our country, to grow our GDP, to grow our economy. That's what we're trying. At the same time, even US will be trying the same. Who doesn't want to be developed? So that is why we see a lot of volatiles, even though we have a red interest, even though we have a good number of jobs report on NFP. That is why we still see price fluctuate up and down. So that thing, it's always going to be there, and it's very rare case that this huge sell off and huge buy off in terms of maybe in a daily chart or monthly chart. That's not that's not very easy to happen in forex. It's gonna take time. It's not stocks. Being said that, let's just dive into this. Let's go to 4-hour chart right now. We were expecting a sale from this. Does that mean that we were gonna sell from here? Maybe somebody took a sale from here, and now they're tearing their pants right now. Why? Because they did not look for confirmation. In a very easy term, this is the confirmation that you need to look while selling. This is the move that you need to look. Oh, sorry. For buying, this is the move that you need to look for. This is distribution. This is very ugly. I will give you a better one next time. This is a accumulation, selling climax, automatic rally, ST, whatever, and maybe this is an STB or a spring. But this break defines the Wyckoff breaking all of this, and then we're gonna involve ourselves on this order block right here. Are we gonna buy here? No, we're gonna look for confirmation. What confirmation here? This area, this area, what you can do is, you, let's say this is a 1-hour chart. So you're gonna move into either 1 minute or 5 minute chart, and then you're gonna look for this again. Again, you're gonna look for this same situation here. This is the Wyckoff entry. This is so far. I will go on sharing the entry confirmation because that would be reserved for our private mentorship. Otherwise, we have a lots of entry confirmation. Our box setup, our CS entry that I shared you on the group today. We have triple M's, double MBs, all of that we have, and those are reserved for the private. So forget about that. So this zone, it's not of a concern to us anymore. It does not matter to us anymore. So this is the area. So I have been sharing to you guys zones, particularly where price may reverse or price may go up. So that's what I've been sharing, and you have seen that price really respect the zones that I have set so far. Why? Because in the previous, I used to share about the liquidity, about mitigation, about the imbalance. What's happening right here? We have left lots of imbalance right here, and it's fulfilling all of that. And where it is coming? It's coming to mitigate this order block. Why it is coming? Because they need to buy here to sell this huge sell off. They need to buy billions and billions of dollars, and then they just sell off. So when they sold this their buy positions are in negative. They cannot be in minus. The banks and institutions cannot lose money, so they need to take out their positions. That is why we have retracements in the market. That is why we have pullbacks in the market. Knowing that the same situation, if you involve yourself in a 5 seconds or 10 seconds or 15 seconds chart, that is why I always say book your profit in the highest or the lowest, nearest highs or lows. Make your BE, because being smaller time frame, price can easily fluctuate just like that. So that is why I always say when you're involving in a smaller time frame, we need to book our profit. So that small time frame is a topic for another day that we will be covering definitely. But I hope you do understand why we made this zone for selling, because of the break of structure right here, because of the break of structure right here and here. We are already turning bearish institutionally on this particular chart on a 4-hour time frame. But till where can we be bearish? That is the question. So we can be bearish till here. Maybe this will happen. I don't know. Nobody knows except the institution. Why is this move? Because this. We broke the structure here. So on the 3 box method that I was telling you about earlier, which I'll be putting out a video, we broke here. So we're expecting a pullback to these zones, and then we will buy from here to go higher, targeting this will be our target. This will be our liquidity. Liquidity means target. This will be our protected low, in which institution wants to protect. They do not want to push the price lower from here, because if they do, that means they are no more interested in protected this area. That means even if price broke here and comes up here, they are likely to go lower. So just like that, our bias can shift, because we are working on a 4-hour here. But if this was a 1-minute time frame, you can shift your bias as easily just like that. So that is why we should always be prepared with our bias before we enter our trade. At the same time, your bias should be aligned with a higher time frame analysis, higher time frame areas of interest. If they do not align, If you are gonna sell here, what's the point? If the higher time frame bullish order block is right here, even if this is printing bearish just like that, why would you sell here? No, it makes no sense. Even if this is bearish just like this, sometimes price just reverse because there is a bullish area the institution wants to protect, and those comes with the area of your higher time frame analysis. So, all right, guys, I really hope this helped you. I think we will be ending our analysis right here. Is there anything else I can do for you guys?
No, sir. Thanks.
All right, guys, enjoy your night. All the best for tomorrow.
Thank you, sir.
Welcome.